Hey guys, Boris. Welcome to the June 2024 review of the technicals in the crosses. And the interesting thing I think this week is that while everybody, of course, is going to be focusing on the majors, the true action, or at least the true sense of whether this is going to be a Armageddon day or week of recovery, is actually going to be in the crosses. We talked about the fact that euro yen, pound yen were the key tells last week, and they certainly were. Pound yen, when we said it was going to break the 150, just collapsed to 145. That was a very, very key level. Certainly worked out exactly as I thought it would. And this week is going to be no different. Those are the two barometers that are going to be worth watching like a hawk, because in many ways they're going to tell you far more than what the majors will tell you in terms of where risk and all the flow is going to go. Let's take a look at the euro yen first, and we can see the euro yen took out the thing that was very fascinating is, of course, we talked about the fact that 122 was the fresh yearly lows, and then once we broke the 120, it just became absolutely like a cascading fountain of stops, and we dropped all the way out to the 116. We held above the 115 level, and that to me is sort of the key support, initial support of this trade. But the very, very wide way you have to think about this week, because of the unusual nature of the volatility, is that we really have to think, I think, in terms of 110, 115. It's extreme as that, yes, 110 to 115 as the major support areas for euro yen. And of course, a relief rally definitely takes us to 120, possibly, and this is really stretching it out, all the way out to 124.25, which is the really big resist area over here. So huge, huge short covering could take us all the way out here. To me, the risk is still asymmetrical. In other words, there's still more downside risk than there's upside risk. But there's definitely don't be complacent. There's definitely some upside risk as well. I just think it's much more probable that we could hit 110s on some negative news flow than we could hit 125s on a relief rally. But still, this is going to be absolutely the most important pair to watch. Even if you don't trade it, this is going to be the pair to watch this week, because it's going to give you an incredibly, I think probably the first look at where the true sentiment of the market lies. And the poster child, of course, for the whole week and the whole Brexit trade is this trade, the pound yen. Because if we are positive, cable recovers, we have positive risk flows, dollar yen recovers, this becomes a massive short squeeze. This is one of those things where I actually think the relief rally on the pro-Brexit flows could easily take us to 155. In other words, if I was bullish, no, I guess if I was bearish Brexit, bullish UK staying, right? If remain is the new word. I'm starting to really hate all of these words that everybody's developing. But if you sort of, if I'm bullish remain, if I'm bullish the fact that UK stays in the Union, this probably is the single best way to express it. But again, I warn you, you're talking about 500 moves a day, 500-point moves in a day in this trade, so you have to trade small. But I think, honestly, if you sort of wanted to trade the relief rally, there's just no doubt this is going to be the relief rally trade. And it could very, very easily come back to 155. So you have 500 points of upside here on a relief basis. If you think all hell is going to break loose and the UK actually does decide to exit the Union, then the 45s are going to go, the 40s are going to go. We're probably going to have to go. Let's just take a look at the monthly charts, because I'll go to 5 years. No, it's not even worth the 5 years. The 140 is clearly the big support area here on the 5-year chart, and that's going to be the natural support area. So it's a 900-point move, which no doubt in my mind could easily happen in pound yen on negative news. It's just going to be super volatile. Whichever way you're going to jump in, you have to prepare yourself for it. And frankly, in some ways, I think a lot of the trade probably is you're going to have to assume the risk probably before the event. Trading it post-event was going to be just such a high mover and so much volatility that you could have 200, 300-point moves up and down. If you're willing to sustain that, if you sort of are willing to hold on through the post-event volatility, that's probably going to be the right way to trade. But if you want to just kind of take a gamble one way or the other, I would position ahead of time, and if you're right, it could be a payoff of 500 points one way or the other very, very quickly. So definitely the poster child for the Brexit trade still stays, still really the big cross for all of us to watch. And for those of us who are not trading this cross, it's very much worth watching as the second barometer of risk. I still think euro yen is the biggest barometer of risk in the market, but the pound yen is definitely going to be the second barometer of risk here as we get a chance to basically make a bet one way or the other, or where we think the Brexit trade is going to go. Now, for a complete change of pace and for sort of a much calmer, much easier way to either trade this or just kind of hide out from it, I think we still have to return back to our Aussie Kiwi trade. Last week, we liked the idea. This is the monthlies. Let me just come back to the dailies because there's a different dynamic here on the days. So last week we talked about the fact that yes, this could press to the downside. We liked selling the rallies in this trade, and it worked very well, selling the rallies. This week I think the technicals are actually telling us a change of momentum. We've been able to hold the 104s for a good 6-7 days, and I think it's worth a punt here to get long Aussie Kiwi. Even if Brexit is a no-go, if Brexit is a no-go, it's certainly probably going to favor Aussie Kiwi because the flow to Aussie is going to, I think, outstrip the flow to Kiwi on a positive basis. If it's negative, both of them are going to suffer, and I think the loss here is going to be minimal. In other words, I think that maybe the Aussie Kiwi, even if we get a negative Brexit result, that is UK leaving the Union, could drift no more than down to the 103.50s. So trading Brexit kind of an out of the way, out of the pathway, could be much easier, certainly for your account and for your psyche, if you position yourself in the Aussie Kiwi trade. To me, the Aussie Kiwi trade kind of telling you that the market feels Brexit is a no-go. I'd like to get long here because I like the risk here, and maybe drift all the way back up towards the 105s on a relief rally. That's the quiet, cowardly trade of the week. And of course, the big risk trade is the pound yen, and the medium risk trade is the euro yen. Let's take a look at the levels to kind of see where everything is going to line up on the three crosses. So resistance here on the euro yen short covering basis 120 to 125. 25 I think is just absolutely the top cap. I would gladly get short 24s here on a relief rally because I think that's pretty much where the euro yen is going to top out. The downside could be pretty severe, so we could take out the 115s and we could run all the way down to the 110s. 110 will then probably bring in a lot of round number buyers and just bargain hunters at that level. So that's if I'm trying to scoop up the absolute lows in euro yen, that's pretty much where I would be parked out in front of. In pound yen, even bigger volatility. The relief rally certainly can give us from the current levels around 149 to 155 and possibly even towards the 160s. The destruction, the collapse move could easily move us down to 140 as we saw on the monthly. So another 900 points away from the current trade. This is the trade. This is the big bet to make this week if you want to lay down your views on how Brexit is going to play out. And then if you want to kind of be a coward and hide out, this to me is the much lower volatility trade. Again, counter pro UK staying, counter Brexit, get long here, support 104s, 103.50 would be my stop for hopefully a smooth move, maybe to 105. So 106.50 is the absolute resistance here. If you think Brexit is a reality, this could be a much less volatile way of trading it. But I really don't like trading this, to the negative side. I think to me this is more of a trade to the positive side. In other words, if I'm wrong, I'm going to be losing quite a little bit of very little money on the positive side. If I'm right, I'll make a little bit of money here. The volatility favors the cowards in the Aussie Kiwi trade. I would now, if I think Brexit is a real possibility, well then just take a gamble with pound yen, take a gamble with euro yen. That's where you're going to get really paid out if you're absolutely correct on that particular view. So it should be an unbelievable week this week. Just as last week was wild and woolly, this week is probably going to be doubly so. The two big events, of course, Janet Yellen testifying and then Brexit coming in at the end of the week, and it should be pandemonium all across the markets. So I hope you guys are ready. I certainly will be. Wish you guys the best of luck, the best of trading. Boris Schlossberg's over and out.